How the heck are you, gang? I'm Roger Herring, founder of Investors Accounting LLC, and I am the Investors Accountant. It's been a while since we've done a video, and I want to say, hey, welcome to this segment of Ask Roger. Today, we're going to talk about getting forgiveness for your payroll protection loan. Now, first, let me say this. I am talking to those folks that operate as C Corps and as S Corps, okay? Those regulations have come out. Partnerships and sole proprietorships, we're still waiting on a few things. So if you operate as an S Corp or a C Corp and you did a payroll protection program loan, listen up. Here are some key numbers. The number 8, 75, and 25. What does that mean? 8. That's how many weeks you have to use 100% of the loan proceeds. 8 weeks from the time it hit your bank account. Okay? That's the first thing. The second thing, 75% of the loan proceeds have to be used for payroll costs. What do payroll costs include? That's the actual gross W-2 salary, not distributions, not 1099 contractor payments, W-2 salary payments or W-2 wages. That's number one. Cost of group health insurance. Notice I said group health insurance. These are policies taken out by your company and managed by your company. If you have health insurance that is not in your company, it does not count. Number 3, state unemployment taxes. Okay, not state withholding, state unemployment taxes. Those are 3 things that constitute the payroll costs. So 75%. PRCST, payroll cost. 25%, the remaining funds, where can you use them? You can use it to pay interest on loan obligations. You can use it to pay your rents. You can use it to pay utilities, things that you have to stay open. Now, here's the key. All of these obligations had to be in place by February 15th. And to get forgiven, you're going to have to prove it. So let's talk about proving these items. First off, you have to show that within 8 weeks, all of that money is gone. You've spent it. How do you do that? Well, obviously, you've got the checks. 75% went to payroll costs. You need a payroll ledger. You need payroll tax forms. These type of things. Get with your accountant, get with your advisor, and talk about what you have. The 25% for the leases, for utilities, all right, for interest. First off, you have to show where you paid the obligation, and you have to show that the obligation existed as of February 15th. To do that, you're going to have to provide copies of the lease. You'll have to provide copies of your loan agreement, that type of thing. Now, that's the basics of forgiveness. So, what happens to the expenses that you have paid with this loan money? You can deduct them, right? Wrong. You see, here's the thing, guys. A forgiven loan is normally considered income. But the regulations say that a payroll protection loan is not income when it is forgiven. It's free money. But, and here's the big but, you cannot deduct the expenses that you used the payroll protection money for. So, if you got a $10,000 loan and this loan was forgiven because you used it on $10,000 of qualified expenses, that nets back to 0. But Roger, I want to deduct that. How's that fair? Well, here's the thing, guys. Let's just assume you're at a tax rate of 20%. You've gotten $10,000 of free money. You're losing $10,000 of deductions, but if your tax rate is 20%, that's only $2,000 of actual cash flow going out. So 10 minus 2, $8,000 positive cash flow. Not too bad, okay? So what if I don't have something that's forgiven? Well, guess what? It's a loan. You have 2 years to pay it back, and it's only a 1% interest rate. I've talked to clients that intend to not get forgiven and maintain the money throughout the year as a loan. That's an option, okay? One other thing, maybe you should consider forgiveness later than sooner. Well, Roger, why the heck would we want to do that? Well, because you can defer your payroll tax payments. The employer's portion of Social Security, which is 6.2% of your gross payroll, that it's incurred between 3/27 and 12/31, you can defer paying that. You'll pay half of the obligation next year by 12/31/2021 and half the obligation by 12/31/2022. Here's the catch. If you get forgiveness, then you have to go ahead and pay. But you can defer up until the point that you have received forgiveness. So if I get a loan today, I can defer 6.2% of my gross payroll, which is the Social Security portion, all the way through the end of the year. I get forgiven at the end of the year, and now I have got 2 years to cough it up. Okay? Pretty simple, guys, but there's a lot of ins and outs and zigs and zags. Talk to your advisors. That's the best thing I can recommend. Talk to your advisors. Don't go out there and just read something, because I guarantee you one person is going to contradict the other. Until the next time, look forward to seeing you. Roger out.